Well, today I've got Larry Goldberg on because this morning's news show, I said, what is going on with the market? The Dow was up 200, the NASDAQ was down 100, and then everything was turning back around. And I had predicted this would be a roller coaster week,
You did.
but I didn't know why. And so anyway, Larry Goldberg's with us to help sort through it. This is Randy Kirk. Hit like, subscribe, and this is going to be a very short video because we just really want to cover what the craziness was. So Larry, go ahead. What happened?
The market happened. Mr. Market woke up this morning and couldn't shake off the sort of cloud of concerns about this coming week, about, earnings, about whatever FUD he's read over the weekend. It's Mr. Market's having a bad day.
Except there was one little tweak to that bad day, something to do with the NASDAQ and a reset or something that I had no idea.
Yeah, that's true if you believe it. That's true if it's true. NASDAQ apparently rebalanced. Part of that rebalance was to reduce this Fab 7 or whatever we call them these days. What is the name? You've got the name.
Fabulous or fantastic or something like that. Yeah.
Whatever 7, yeah. And to reduce that focus. And so some of those stocks were sold off, although not everyone seemed to be hit by that. Although the volumes could be reflected in the volumes. I didn't look at the volumes. But
well, Meta had news. So they had 1 million people sign up for their new thread. So their stock didn't go down, but I didn't look to see if it really went up at all. But Apple went down significantly, and Google went down significantly.
Did you say 1 million people?
No, 100 million.
Yeah, thank you.
100 million
I heard.
Yeah. So and I think Tesla going down, I think was 100% due to the NASDAQ thing. I really do, because there was no news on Tesla.
Yeah.
To cause a
problem.
Well,
the reality is that when there's downward pressure on Tesla for exogenous reasons, then what will happen is that the market makers who have to balance their option exposures have to amplify that situation.
Right.
When I say have to, they are inclined to, because otherwise they would have significant exposure.
Right.
So Tesla is the most exposed company on the market today in terms of open options, and most of them are short, but not all of them are short.
Right.
So when there's a movement in the stock, it tends to be amplified, and that's why Tesla outperforms or underperforms the market movements on a day-to-day basis. So you've got this double whammy of the rebalancing of the index and the reaction of the market makers.
Right. Yeah, it's usually can be anywhere from 2 to 4 to 1 in terms of how Tesla bounces back and forth. And that's why so if I wasn't even in love with the stock and the company and the founder, I would be interested in Tesla just because it's swings wild.
Yeah.
I tend to be inclined towards those kind of stocks, especially when it comes to leaps, but that's a story for another day. Anyway, so we have the NASDAQ reformulating their balance. The Magnificent Seven specifically was part of that rebalance, dropping them fairly significantly in the percentage overall. I saw the number. I might even have it handy. I'm not going to look for it real quick, but it was not insignificant. And so most of the articles I'm reading said that is what affected those 6 of the 7 stocks today. And as you point out, even more dramatically. Now, the interesting thing was, though, that Tesla bounced off its technical level there at 265, 260. Right. So that was good that it held, even in that environment, it held at that level. So I have a hard time, unless the news is horrible on Wednesday, seeing Tesla going below that 265.
What do you think is the break point for Tesla going below that 265 in terms of earnings?
Oh, in terms of earnings. Oh, yeah, there you go. That's another question.
Well, that's what is the support level? What
Yeah.
is the downside risk? What is the upside? That's the interesting thing. And I think between now and the 19th, we should resolve that in our minds.
Yeah, well, first of all, I'm on record over and over and over again as saying I think Tesla will test 300 or 305 between now and a week from Wednesday.
Right.
I could be wrong or right on that, because this coming Wednesday will probably have a great effect on that.
Yeah.
If we have a miss on the CPI,
Yeah.
Tesla's likely could even go back and test 235 or 237 or whatever that point is. But if we do good on the CPI, then I think Tesla goes forward and tries to get to 300 or 305. But then to your question, what happens if there's a miss, and what does that miss have to look like? Let's say I think the margin has to be under 18 to be a miss. What do you think?
Well, that's possible. It depends on what offsets there are to that. Some of the offsets could be material and could be eye-opening, like energy,
Right.
and could offset the news.
Right.
I think the number is not the gross margin, although it could have a big effect if there's no offsetting news. I think EPS miss is going to be the more serious.
Mm-hmm.
If we get below 80, if we get materially below 80,
Right.
I could see a slide of 100 points.
Wow. Wow. Okay. Materially below 80, a slide of 100. So back down to the 160 support level.
Yeah, yeah. Well, I was thinking 180. Maybe
You're thinking 180. Well, I think there's a support level around there too as well. I'm not a technical expert by any stretch, but
neither am I.
So I sometimes forget exactly where these so-called levels are. But all right, well, that's interesting. On the other side of the coin, being more optimistic, I think if we go over if we go over 90 cents, I think unless it's $1 or $1.05 or something like that, if we're between 90 and $1, probably off on Thursday, Friday, and then starting back up again the following week. But if it's the numbers that you and I looked at a couple of days ago, and it's over $1 or something, I don't know that we go down on Thursday.
I put out my forecast of 99 cents.
99. Okay.
Yeah, because I hadn't adjusted. I have a macro that adjusts every quarter the adjusted share count.
Okay.
It didn't adjust last quarter. Actually, there are a few adjustments that are wrong. So the actual earnings I came to of 109 was wrong. It's actually 99.
99. Okay.
Or $1. So I think anything over 85, 88 cents is fine if the margins are reasonable.
Mm-hmm.
If the margins decline significantly, that's going to be a problem unless there's some really strong offsetting news. So, from a short-term point of view, I just see the potential for a real buying opportunity in the second quarter. Time will tell. Time will tell.
Yeah. All right. Well, good. Thank you, Larry. So once again, the reason for this short video is because there was this NASDAQ interference in the market today, which I don't want it to be throwing off anybody in terms of their analysis right now of Tesla, because there was no reason for Apple. There was, and in fact, all of the Cathie Wood stocks were up today. So this was, I think, really a NASDAQ deal. So Larry, thanks again for being on. We will have you back here probably on Tuesday. We're going to be talking about the limiting factors video, and in more general sense, the overall question of mining and refining for Tesla, what that really means. And you have some very strong opinions about the side. Okay. All right. So that'll probably be on Tuesday. So again, thank you, Larry. Thank you to all of you. Hit the like if you like having Larry on. Hit subscribe. Oh, and follow Larry at Tesla Larry, and buy the book. It's been great talking to you. Bye, Larry.
Thank you.